Good morning, and welcome to this week's What's Affecting Oil Prices. I'm Ashley Peterson, lead oil analyst here at Stratas Advisors. Despite a last-minute recovery, Brent fell $6.44 a barrel last week, with the benchmark crude nearly ending Wednesday sub $60 a barrel. WTI's average fell $4.01 a barrel last week and also saw a recovery at the end of the week despite a large crude and refined products build. For the week ahead, we expect Brent to average $61 a barrel as prices pause and markets reevaluate economic expectations. The Brent WTI differential will remain wide as fears of an economic slowdown and/or production increase are especially weighted towards U.S. markets. Oil ministers from Russia and Saudi Arabia have been meeting on the sidelines of the St. Petersburg International Forum. We expect to see statements reaffirming commitment to stable oil markets. However, the Russian government is increasingly facing pressure from internal firms to end the production agreement and raise production. Russia's April compliance was 80% according to the latest IEA report, with many other OPEC Plus signatories achieving compliance above 100%. Russia's withdrawal would likely have a more immediate impact on optics than overall fundamentals. However, the optics would be very negative and would certainly force Saudi Arabia to shoulder an even greater share of the burden beyond the 256% compliance reported in April. Geopolitics will be a neutral factor in the week ahead, with no immediate oil-related disturbances on the horizon, although fighting in Libya and Sudan could eventually impact flows. The global economy will be a neutral factor in the week ahead. Over the weekend, it was announced that tariffs against Mexico had been averted, removing at least one element of uncertainty, although the trade dispute with China continues to drag on and economic reports remain lackluster. Supply will be a negative factor in the week ahead. Oversupply concerns remain focused on the United States, but in light of the recent price correction, OPEC members are also coming out to reassure markets that any increase in supply would be fully justified by pricing and fundamentals. While strong, oil demand is likely to be a neutral factor in the week ahead. Margins globally remain below their seasonal averages for this time of year. However, utilization is still high and product stocks are falling.
This weekly report is an excerpt from our short-term price outlook service analysis. For more information, please contact us. For more hard energy videos, follow our social media channels.